Welcome back to the Deep Dive. This week we are tearing into the Q3 2025 earnings call for BigBear.ai. That's ticker BBAI.
And this one was really something.
It wasn't just about the numbers. Management dropped what I'd call a strategic bomb that completely changes their story.
It really does. We're talking about a massive M&A-driven pivot. Big Bear is basically telling the market they're going on offense.
Full offense. To become the secure AI platform for defense and intelligence.
And that narrative, it just absolutely landed with investors. I mean, you just have to look at the stock price.
The volume spike was huge.
Huge. The market found this story incredibly compelling, especially with all the headwinds in the federal contracting space right now.
Okay, so let's unpack this. But first, let's set the stage with the financial beats that got everyone's attention.
Sure. The headline numbers were solid. Always a good place to start.
They delivered a non-GAAP adjusted EPS of -3 cents. That was a 2-cent beat versus the street's expectation of -5.
Right. And revenue came in hot, too.
$33.1 million, which beat the $31.8 million consensus. So solid beats across the board.
The beats were important, yeah, but the real story, I think, is the financial flexibility they've built. The balance sheet is the anchor for this whole thing.
Okay, tell me about that.
They ended Q3 with a record cash and equivalents balance of $456.6 million.
Wow.
And if you add their investments, their total cash and investments hit $715 million.
That is some serious dry powder.
It is. It gives them the firepower to do this deal, handle the integration, and maybe even look at more M&A down the line.
And the backlog is still strong.
Maintained at a robust $376 million. So there's near-term visibility in the pipeline.
So a well-capitalized company, visible pipeline, and they beat estimates. But like you said, those numbers were completely overshadowed.
Completely.
Let's get to the main event, the acquisition that defines their whole path forward.
It absolutely does. The core of this new equity story, the thing that might warrant a whole market re-rating, is the definitive agreement to acquire Ask Sage for $250 million.
$250 million. So let's break this down. What is Ask Sage, and why is it so valuable to national security customers?
So Ask Sage is a cutting-edge generative AI platform. And its real value is that it solves the single biggest problem the Pentagon has with AI right now.
Which is what? Security.
Security and compliance. They desperately want to use these new frontier models, this tech behind ChatGPT or Claude, but they can't use them with classified data.
Right, for obvious reasons.
Exactly. Ask Sage is purpose-built to let them do that. It's a secure way to distribute AI models and what they call agentic capabilities inside these super regulated environments.
So if I'm an analyst at, say, Space Force, this is like a secure gateway that lets me use the latest commercial AI on my classified data without breaking any rules.
That's a perfect way to put it. It wraps a layer of governance around the data and the models, and it's importantly, cloud and model agnostic.
So they're not tied to one provider?
Not at all. They can use the best tool for the job at any given moment.
Okay, so that brings us to the credentials, the competitive moat. You mentioned FedRAMP High accreditation. For those of us who don't live in that world, why is that such a big deal?
Well, it's a gigantic deal. I mean, it's the difference between having a product and having a solution you can actually sell to the government.
It's the seal of approval.
It's the highest level of security authorization for cloud services. Getting it can take years and millions of dollars. Yeah. By buying Ask Sage, Big Bear just completely bypasses that whole painful process. They get a platform that's already trusted at the highest levels.
And the installed base reflects that. They mentioned over 100,000 users.
Across 16,000 government teams. This isn't a pilot program.
That's real scale.
That is substantial defensible market share. We're talking the U.S. Space Force, 11 combatant commands, the Army's enterprise LLM workspace. This thing is already deeply integrated.
And the revenue potential is explosive.
Tracking toward $25 million in annual recurring revenue for 2025. That's a projected 6-fold increase over 2024.
Okay, but let me push back on that a bit. A $250 million price tag for $25 million in forward ARR. That's a 10 times multiple. Isn't that a huge risk of overpaying?
It is absolutely a premium valuation, no question. But management is making a very directional bet on two things here, the moat and the speed.
Explain.
The moat is that FedRAMP high status and the deep integration. You can't just replicate that overnight. And the speed is that they believe the combined company can get software-like multiples right away. It's a growth purchase, not a value purchase.
And they're bringing in the talent to lead it. Nicholas Shalon, the founder of AskSage.
And former chief software officer for the Air Force and Space Force.
He's joining as the new CTO.
That hire is almost as important as the tech. It signals a real pivot to a software-first culture. And Shalon has immense credibility within the DoD.
Let's talk about the synergies. This is how they have to justify that price tag. Management laid out 4 key pathways.
Right. First is just straightforward cross-selling. Take the AskSage platform and immediately pitch it to all of BigBear's existing customers.
DHS, the intelligence community, commercial clients.
All of them. Second is the reverse of that.
Injecting BigBear's products into the new user base.
Exactly. Push their proprietary apps and data sources to those 100,000 AskSage users. Instant distribution.
Third was about services revenue.
Yeah, wrapping their high-margin integration and mission services around the applications. The platform creates the demand for the services.
And the fourth one, which to me sounds like the biggest moat builder, is using AskSage as a marketplace.
This is where it gets really interesting. It becomes the default ecosystem for AI in government. Any future M&A, any new organic product gets a faster, pre-approved, secure route to market.
It cuts down the friction of selling tech to the government.
Fundamentally, a virtuous circle.
Okay, that's a very compelling M&A story. But every big pivot like this has risks. Let's talk about the cracks that were showing in the Q3 financials.
We have to. And they're significant. Revenue was $33.1 million. That's down 20% year over year.
20% is a sharp drop.
It is. Driven mostly by lower volume on some Army programs. And that revenue drop, combined with a different mix of contracts, just hammered their gross margins.
Right. The margins fell to 22.4% from almost 26%.
And management was clear that was all about the mix shift. The high margin work they had in 2024 just didn't repeat this quarter.
So that led to a pretty big swing in profitability.
A massive swing. Adjusted EBITDA went from a positive $9 million last year to a negative $9.4 million this year. That's a $10 million swing.
That's the red flag you can't ignore. And on top of that, SG&A spending jumped by about $8 million. Is that just unfocused spending, or is it strategic?
Management argues it's strategic investment. They broke it down into a few buckets.
Okay.
Over $4 million went to increase labor, basically hiring people to get ready for the AskSage integration. Another $2 million was for M&A advisory costs. And about $1.4 million went into marketing and growth.
So they're spending now betting it pays off when AskSage revenue kicks in?
That's the bet. And all this was happening against a chaotic government backdrop with shutdown threats.
How much did that disrupt them?
It definitely caused disruption. The good news was over 80% of their work was deemed mission essential. So it continued.
But not all of it.
No. Some contracts, mostly for the intelligence community, were paused. That caused some delays.
And yet, despite the revenue drop, the margin pressure, the chaos, they reaffirmed their full-year revenue guide of $125 to $140 million. That's a strong signal, isn't it?
It is a massive vote of confidence. It signals they fully expect the funding from that one big, beautiful bill to finally materialize and turn their pipeline into contracts.
Just to remind everyone, that's the big omnibus spending package that unlocks a ton of defense contracts.
Right. But it's key to remember that AskSage isn't a 2025 story financially. The deal closes late this year or early next. The real impact is a 2026 story.
So the market basically decided the long-term strategic pivot was worth more than the short-term P&L pain.
The stock performance makes that pretty clear. Over the last year, BBAI is up an astounding 233%.
And the broader defense ETF, ITA, is up, what, 40%?
About 41%, yeah. Investors are betting big on this AI modernization story.
And the company also pointed to some other operational momentum, right? To show they're not just a one-trick pony.
Yes, they're trying to diversify. They mentioned the expansion of their VRS scan biometric platform at airports like O'Hare and Seattle.
They're moving into the travel and trade sector.
And internationally, too. Trials of their Pangium threat detection in the UK, momentum in the UAE, and then, of course, there's the big public visibility play.
The naming rights deal with the Washington commanders for the BigBear.ai Performance Center.
A very savvy move to get mainstream brand recognition.
Okay, so for you, the listener who's tracking this story, let's lay out the key proof points, the catalysts to watch for in the next few quarters.
There are 4 things I'd watch very closely. 1, the successful closing of the AskSage deal. We need to see the roadmap for those synergies.
2 would be contract wins, right?
Exactly. Conversion of the pipeline. We need to see tangible wins from that one big, beautiful bill. 3, gross margins have to stabilize and start creeping back up.
And the last one.
The 2026 outlook they provide in the next call. That will be absolutely critical to see if this new valuation is justified.
Okay. This brings us to the part of the deep dive where we explore, let's say, a wild yet plausible trade idea based on this new info.
And we must say, this is not financial advice.
This is not financial advice, but if we were to construct a trade based purely on the thesis from this call, it feels like the idea is BBAI is shifting its whole DNA.
It's moving from being a defense services company to a defense software platform company.
And that's a fundamental change.
It is. So the thesis is this pivot is non-reversible. They're using their cash to buy a high-growth, secure software platform right when the Pentagon is desperate for this tech.
So what's the trade?
A pair trade. You would go long BBAI, betting on that platform upside and their strong cash position. And at the same time, you would short a legacy, services-heavy defense IT contractor.
So you're shorting someone who hasn't made that pivot yet?
Exactly. Someone who hasn't demonstrated a clear, accredited Gen AI platform strategy. You're betting on disruption.
You're betting that BigBear's speed and their new tech will let them capture market share faster than the big, slow incumbents can react.
Precisely. The bet is that this $250 million deal is the inflection point that gets the stock re-rated with software like multiples. Multiples the old services firms just can't get.
It's a pure tech disruption play.
In one of the most protected industries in the world. So, to recap, Q3 was really a strategic declaration. BigBear leveraged its capital to buy a high-growth, defense-grade AI platform.
Ask Sage is the foundation of their new ecosystem.
And is. But the challenge is all about execution now. They have to integrate Ask Sage seamlessly, and they have to fix those gross margins.
So here's the final thought for you to chew on. If Ask Sage really delivers on that $25 million in revenue, and if it holds onto that security moat, how quickly does BigBear force the huge legacy defense players to follow suit?
Do they have to go out and make their own massive M&A deals, or do they risk getting completely outmaneuvered in this race?
Something to think about. Thanks for diving deep with us. We'll catch you next time.